Morning, everybody. It is 8:11 a.m. It is April 2nd. Hope everybody had a good day yesterday. A little wild day in the markets, pushed up higher, and then that all fell apart. And currently we're gapping lower. So that's what's going on right now in the market. Um, let's get right into it. Welcome to my channel. My name is Steven Gonzalez. I use volume profile, market profile to find structure in the market, along with gamma exposure, levels, the supply and demand, anchor view ups, most traded price of the year, the rolling month, the rolling week, previous day. When they line up, it helps me put risk on and possibly take a trade. That's basically how I look at the market. And when we get to the market profile and bond profile, that's when I'll map out the scenarios for the day, and that's we'll go from there. So we get some analysis that way, and really easily I can see what's going on by looking at the volume profile, market profile, and the levels that I map out. Okay, so hopefully you guys will enjoy that analysis. All right, subscribe, set an alert if you haven't already. That would help me out a lot. And if you can give me a like, that would be much appreciated. You can also follow me on X. That's at Gonzo7. That's at Gonzo719. And without further ado, let's get right into the watch list here. All right. So we got an elevated VIX. We're at 14, up 3.74%. Silver's up 2.32%. Crude getting a lot of love, up 1.48%. Gold up 0.88, so gold's still moving. All right, dollar is down 0.09, ES is down 0.41, Nasdaq's down 0.51, the Dow's down 0.56. 30-year bonds being sold. That should rise the 10-year yield again. Russell is down 0.7, Ether down 5.25%, and Bitcoin's down 6.1%. One hell of a pullback in Bitcoin, down to 66,000. So that's obviously going to affect. Excuse me a second. Sorry about that. Forgot to shut my phone off. All right. So Bitcoin's pulling back pretty hard along with Ether. Obviously, those crypto related Bitcoin stocks are going to probably be in negative territory. So let's look at the Mag 7 Plus. Leader's not much of one. JP Morgan, it's down 0.12, so that's not a leader, right? Now, we got some, Nvidia is down 0.87, so that's below 900. I'd say 900 is a key level to look at, okay? Google is down 0.93, AMD down 1.03%, Tesla is down 1.24%, Coin, there you go, down 3.79%, okay? Moving on, top sector stocks. We got Exxon and Chevron leading the pack. No surprise with crude pretty much going. What are we at now? Almost $85 a barrel. All right. Now, laggard, Salesforce, Semi, and Qualcomm. Disney down 0.81, and then United Healthcare. A lot of health insurance related stocks down this morning because of this Medicare reimbursement being the same. So, yeah, that's taken down a lot of healthcare today. And healthcare is a big sector in the S&P, so that's going to put some weight on the Dow. The United Healthcare is the largest holding in the Dow, so that should pretty much make the Dow very weak, which it has. Okay, so that's what's going on there. Let's move on to my swing trade list. The leader, AMC, it's really the only good leader at 2.23%. All right, followed by Devon Energy, GDXJ. That's not really gold. That's not much of a leader as far as those. But if we go to laggards, we have Humana. That's healthcare. MicroStrategy, Bitcoin related, 6.64% down. The IBIT, the Bitcoin ETFs, down 5.64. Maris 4.95. CVS, that's the healthcare, down to 4.6. Riot down 4.1. Hood down 3.92. So those are the those are the laggards. Those are the laggards. All right, so we can move back down to the top sector list and go to the sectors. No surprise here with energy, crude pushing up pretty good. It's really the only thing that's positive is energy. And then we have the big boys are down. So you got discretionary, that's Amazon, Tesla, Home Depot. We got communication, that's Google, Meta. All right. Technology, that is Nvidia. That is semis are included in that. All right. Apple, Microsoft. Okay. And then semis down 0.63 and healthcare down 0.63. So the heavyweight sectors are all down. Now, usually semis have been leading the pack, and usually when I see semis that are weak, it's very hard to get a follow through day when semis are weak pre-market because people look at them as dips to buy. So that's something you got to keep your eye on. And AMD has been really consolidating. It's tried to move higher, but I think you might have to get a shake out there to see what happens there. All right. So that wraps up that. We can get into some economic calendar, some news today. There's a lot of Fed speak this week, as I mentioned yesterday. And let's get into that. So what do we have today? All right. So JOLTS jobs openings. That is, you have to look out for at 10 a.m. along with factory orders. There's a slew of other data that comes out at 10. You don't want to enter trade around 10 a.m. You're going to get stopped out. It's not worth it. Wait for the noise to settle down a little bit. Then you had Fed Bowman at 10:10, Fed Williams at noon, Fed Mester at noon. Okay. Fed Daily at 1:30. All right. You got API crude at 4:30, and that's really it for today. All right. Now, as far as some news, I already went over some. Let's look at this if there's any update to upgrades and downgrades. Anything to note? Not really. Not really here. Not really there. Stuff I wanted to get into. Let's see. Health insurers. So in the corporate sector, health insurers are likely to be in focus after the Centers for Medicare and Medicaid Services announced unchanged reimbursement rates for Medicare health plans, signaling that insurers' margins will remain under pressure. So United Healthcare, Humana, CVS, all put that under duress. Crude is liking the manufacturing strength and improving demand in China and U.S. That is helping crude. Now, with crude going up, obviously headline CPIs for the next coming months might not look so great. So be cognizant of that. That doesn't affect core, but that affects the headline CPI. All right, let me look if there's anything else news-wise to talk about right now. I think that's really the ones that I wanted to focus on, really. And yeah, that's probably it. I think we can go over to the daily chart. And we'll check in on this. So this channel, we've talked about this, but it's been resistance. Okay, been support. So let's just zoom in here. What we did yesterday. Okay. Now yesterday, you opened here, pushed up, you went to last week and last month's highs, and then we sold off. Then got buying excess, closed up here, right? So you're within this channel, which is not a great place to be. Okay, so pre-market, we are at 520. We are gapping lower. Now, notice this trend line here. That's kind of where we're at. All right, and last week's lows is at 518. So think about 519. Okay, 520, 519 could be support today. Okay, be cognizant of that 519, 520 and the bottom of this channel. So could get a pop up today. All right. Now moving on to the Qs. Okay, let's look at Qs. Here's a zoomed out picture. Okay, Qs have just been kind of more range bound. Okay, look what we did. We went up to that area I talked about in futures. That's been resistance, resistance, right? We came right up there. All right, now let's look at, let's do this real quick. Just so we can really look at the levels here. Okay, so what do? We went up to last week's highs, right there, raced up there. It was looking like, whoa, right? This is big resistance here. Couldn't make it, right? It went right back, broke last Thursday's lows, and then closed in the middle of like a doji candle. Okay, this is last week's lows. So in the middle of the model here, where we closed, right in the middle of the model, right now, where are we at now? 442.65, 442.65. We are right here. Okay, at a key support level now. So this is last week's lows, 20-day simple moving average. Have to respect this. Okay, so look at that, call that 442, 441. 442, even 441 could be support today. Okay, because that's last month's highs, right? This is the previous month's highs right here, 440.58. So from 441, 440, like I said, could get some love when you hit that 20-day simple moving average. All right, now below that you do have a trend line here that has not been violated yet either, and let's say that would be around 439. Okay, so have to see what happens here. Gapping down, but gapping down into a key support level, so have to see what happens here. Okay, I think we're gonna move on to the triple-headed monster. We'll check in with the 10-year yield. Now 10-year yield has been rising. That should put weight on equities. Doesn't always mean it will. Let's zoom out. Now I talked about this yesterday, how it's just been meandering in this web of moving average. Well, look at that. Boom. That's what happened yesterday, right? This is what happened today. Gapping up above this area. So the 10-year yield is up 1.06%, up to 4.3 yield. Okay. Wow, if you get follow through here, this might start to put weight on the equities now. Okay. I just was talking about this yesterday, how it's just been hanging out here, and boom, it broke out. It has to hold this. Let's see. Okay. Now the VIX is finally getting, we were down there hanging around the 12s, 13, now pushed up to 14, has to hold above 15. I would say to think about any kind of fear. Okay, now the dollar has to cooperate too. All right, you got a rising dollar. All right, so let's see. Now you're getting a little bit of a consolidation after yesterday. Look at that move from yesterday. Boom, dollar rose up. Okay, so that's what we have going on there. So keep a close eye on that. And now we can move on to the structure. Okay, we can move on to the market profile, the volume profile, the whole reason I look at this and find my scenarios. Okay, let's look at this together. Might even make this a little smaller. And let's get some other levels in here. Okay, so let me get my trusty marker out. All right, let's look at the profile now. Okay, last rolling 5 days, got a little excess here at the top. The most traded price of the week has moved higher, like yesterday. I said that would, and it did. 53.10. Then we got a double distribution here. That was the old most traded price of the week right there, right here. Okay, now we're putting excess lower. Price is right here. Okay, most traded price of the month is still down here. That would be a destination if we fall apart today. Now, if you look to the left, you have support to the left. That's where we're at right now. That's why we're stuck there. So can this be a shakeout where we go and break that support and rip back up? Yep. Definitely can. Definitely can be. Okay. So we always got to talk about what? Gap rules. Okay. Here's yesterday's lows. That's a gap fill. Here's price. All right. Like I always say, here's how you gauge the gap. I say this a lot, so this is how you gauge it. All right. So gap and go is the most bearish, right? You break the support, you head lower. Most times that goes without me. I don't chase. Okay. Second is you pull back, but you don't fill the gap, and you roll over. That's still bearish, right? And then you have the gap fill, but then you can roll over. So those are bearish scenarios, right? Each by strongest sellers, second strongest sellers, third strongest. Okay. Obviously, door number 4 is moving back into range. Moving back into range would signify that the sellers are not as strong. Okay. Now you have to be cognizant of this big support level here around 52.70. Okay. You have to be very cognizant. That's where we're at right now. So, like I said, it could be a shakeout. Could be a shakeout. Very easy. You can go whoop, start recovering, because guess why? You have shorts from here, here, and here, all getting paid. Okay. If I'm short from here, I'm probably taking profit as this extends out, right? You got to put yourself in the opposite of shorts. If you're short up here, right? What would you do? You can hold on. So now we got a lot of levels. There's some big orders hitting the tape. That's buyers probably buying this excess, right? Now we have some important levels that I'm looking at right now, staring me right in the face. Okay, we have a weak high. Where is that? Now check this out. This is yesterday's close. Okay, this is also the most traded price of yesterday. This is also the most overnight high. Okay, so if this market, right, was to come up, do the shakeout, come up and push through here and hold it, it's going to probably send this up here. Okay, so this level here, let's call it 52.94, is very, very key. Very, very key level. All right, that's a very, very key level. Okay. Now, one other thing to note, okay, and this is in part for a fade, in part for the shakeout, is let's look at the overnight inventory, right? This is, check this out. That little blip is the only longs in this overnight to this much short. And we're at the lows. Okay? That even makes this level even more important now, that week high. Because we have shorts that are getting paid from here, here, and here. 100% net short at the lows. Okay? At the lows of this key support area. Okay? So shorts are getting paid. Now, you know that they don't last long and dips get bought in this market. Okay? That doesn't mean it happens every time, but that's kind of the theme. All right? Now, being with all that said, okay, we have to talk about our scenarios. Okay? So now that we're underneath this most traded price of the week, underneath the previous most traded price of the week, right? And we're at the lows. You have to say sellers are in control right now. Okay? So let's go with the bearish scenarios. Now, I already talked about the gap rules, right? So we're going to go to scenario. Okay, number one, you fill that gap. And then we roll over. And if it's strength in sellers, we're going to go and revisit. There's a demand and there's a 20-day simple moving average on the futures along with the most traded price of the month down here. All right, that's about 52.35. That's possible. We finally can get weakness in the market, right? This is scenarios. Be conscious of that, right? We also can push down, trap, do a little bear trap, push up into this supply. Remember this weak high I talked about, right? This is the level you got to concentrate on. If you come into here and you get selling, well, guess what? All the longs that were up in here, if we push back up, they're going to take it, and then this makes us move even better. Okay? That's really what I'm interested in if I want to look short. Okay? Now, if we're going to look long, all right, a little inverse of that, right? So, what did I say? If I am looking long and I think there's going to be a bear trap, now again, I am only going to know that based on internals and how the stocks that move the market and sectors are looking when the market opens. I don't know if I'm going to look for that. Okay, it all matters what happens here at these lows. So I would like to see a gap and go. Oh, that's a little too thick. I would like to see a gap and go, something like this, right? We know they're 100% net short. I'd like to see a little bit of a shakeout here and really get a recovery. Snap back, higher low, market starts recovering. This is where you can get that move. And you can get it right to here. That would be a fine trade. Okay. Now, if you hold on some and we push up. Now here's month to date view up. Here's monthly view up. They're together right now. Week to date and monthly view up are the same because it's a new month, new week. Okay. If we hold this level, we're going back here. Okay. So that's really all I'm looking at today. Pretty simple. And like I said, this is a judgment call when the market opens. Really, I like it though. All right. So that was the ES scenarios there. All right. Now, if we're going to move over to NASDAQ, let's look at that. Because the NASDAQ has been more balancy. Okay. And we'll look at that together right now. And you'll see the difference. You'll see how big of a difference there is. It's very, very balanced around one price. You can see the profiles very balanced. It isn't like the ES. ES has that double distribution. ES look like this, right? The NASDAQ is literally just trading around this price here. What price is that? 184.75. Okay. That's just revolving. That is the mean, okay, in the NASDAQ. Okay, so the NASDAQ actually just broke this demand zone. It broke it. Okay, so I'm going to get rid of this demand zone now. All right, we're gapping lower. Now, this is balance, okay? So what happened yesterday is when you're in balance like this, like look, this is what we've been doing. Boom, 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 boom. So you hit, let me move this over. Ooh, sorry. Okay, let's do this again. So if we're here, this is this area, right? It started really right here, resistance, right? Came in here again, resistance, came in here again, resistance, right? But let's look at the lows. Push down, pushed up, pushed up, pushed down, push back up, push down, and now we're down, right? So at the bottom of this balance area. Okay, balance rules are always if you fail to break the top, you go back to the bottom of the range, and that's where we're at now. Okay, we're here, 20-day simple moving average in the futures. Okay, look at the last time it touched it. That's very key. And we're at the bottom of this support. Okay? Look at the profile. Very balanced, right in the middle. When you're on this edge of the balance, if you can't move lower, guess what? You usually move to the other side. Okay, so of course, you could break out. You could break out to the top. You can also fail to break out and come back. So there's a lot of things when you're in balance, okay? But most times than not, okay, if you're short from here and you're at the balance and you feel like we're struggling, you most likely, one time you see that movement, people are going to be like, I'm out. I'll take my shirt off, right? So let's look at this together. We already talked about the gap rules. I don't have to talk about that, okay? Let's look at inventory. Only long to this much short. We're at the lows, right? We're gapping down and we're at the lows. That's what you want for a reversal. 100% almost net short at the bottom of the session in the overnight, right? You're gapping lower into a support level into the 20-day simple moving average on futures on the daily. Okay. Now, again, we can break out. I'm not saying that. I'm not saying that at all. Most traded price of the month is still down here. Hasn't moved yet. So we're right now, here's the most traded price of the week and the most traded price of the month are here. Prices in the middle of them. We could definitely push down to here. Okay, but I'm going to be really patient and seeing if this is a shakeout here. There is demand right there. So we could even touch this demand and then rip back up. Okay. Now let's look at, so here's our gap. Here's our yesterday's highs and lows. Overnight high, overnight low. Now, this particular chart, because it's more of a balanced, it's in a range, right? It doesn't have that weak high like the ES does. It doesn't have this level here where I'm like, ooh, that's weak. It doesn't have that here. We just have to go off balance rules in the NASDAQ. Okay? So it doesn't have that. We're gapping lower. Okay? So shorts, I would say, are a little harder in this scenario to have that weak low because we're at the bottom of balance. Okay, it's a little different here. Okay, so let's look at this. All right, so you got to go into, let's go into the bearish mood. Okay, we are gapping lower. Okay, right at the 20-day, we're moving down right now. Okay, remember though, into key support. So I could definitely see this violate the 20, come right into here, right? Gap and go, come into that demand. That's one thing it could push right back down, pop up, right? But let's go over real bearish scenarios, meaning more of a trade. Okay, so number one, obviously you can push back up into this gap and we can roll over. Okay, that's one, of course. Like I said, we're at the bottom of balance, so I don't like that risk to reward as much with demand right here. Okay, that's what I'm saying. All right, so what you're gonna have to see is, let's say for this, you can come in here. Like I said, that's one. You gap fill, you roll over. I just gave you that. But if you move up in to the mean, this is really, now it definitely could stop here and you can roll over. That could be one. Okay, and you go down to that most traded price of the month down there. I'm not in love with that just because it's balance. Okay, but it could happen. But balance rules, if you go that high and you just take this out, I'll show you as far as the bullish scenarios. That's really all I would say. Is you got the gap fill can roll over and into this demand, or hit this most traded price, the mean, and roll over. Okay, but since we're in balance, I kind of like the long scenario better in the NASDAQ. Okay, I like the 100% net short. I like we're in balance. I like there's a demand here with the most traded price of the month. So what I would like to see is push down. Go ahead, gap and go into this demand. And then really get some buying excess here and start doing some lower highs. There you can probably take some off at the gap fill and really see if we can go right back to the mean, right? If you take this out, we could even go back to the other side of balance, right? That's what I would kind of be looking for. It doesn't have to go into this demand zone, okay, but it's very close to it because just, shorts are getting paid right now. And we're hitting 20-day simple moving average on futures. So, if you don't have a demand zone on your chart here, you don't know that it's going to hit that, but it's getting close to it already. Right now, it's pushing into it. Okay, and you have to watch Nvidia. What is it going to do at 900? Okay, that's really all I'm looking at. Like I said, who's getting paid? Shorts. If they see any type of buying a dip activity, they're going to cover. So that's what I'm really looking at today. And of course, if the market's super weak, I'm not just going to fade it. So um, that's really what I see today. All right. So you got a balancing market in the Nasdaq. You don't really have that as much in the ES, but you can play off the levels. Okay. I hope everybody enjoyed that analysis today. Okay. Subscribe if you did. Set an alert. Okay. If you did enjoy it, please show me some love. Give me a thumbs up, a like. All right. And you can always follow me on X at Gonzo719. Okay. So we have the plans. We have the plans. Okay. Yesterday, I did have a long queued up, and I wanted to see one more push down, and that split second wait I don't chase, so it went out without me. And then I had a short that I was gonna do later on, and it was kind of a lunchtime, so then I just decided not to take it. So yesterday I really didn't take a trade. That's fine. So today I'll just be very patient. And Nasdaq right now, guys, is almost touching that demand right here, almost dipping its nose into that demand. And I'm going to get an alert when it does. Let me just make sure I have an alert. I have to go to the other screen. Okay, now one thing too, as before I leave you, let me just show you one thing. I just want to look at the relative volume this morning because what I saw was nice volume today. Maybe people are back from Easter and it's Tuesday. Let's look at the relative volume. So in ES, we're at 107%. That's pretty good. Okay. Nasdaq's in the 112. So we have nice volume coming in this today. Now, of course, because we're selling. Okay. So I'm liking it. I'm liking it. All right. So we'll keep an eye on this market profile. These are the dual setup I have. This is when more of my trading setup. So Nasdaq's almost pulling into that demand. Okay. So we just have to watch that. Do you get a gap and go, or do you get that dip buy? We'll see. We'll find out. All right. I wish everybody good luck today. Okay. And maybe I'll do a midday update today. We'll see. There's a lot of Fed speak today at noon. So anyway, wish everybody good luck. I'll see you tomorrow.